Good evening, everyone. Welcome to Simple Trade with Patience, your one-stop for daily market insights. Whether you're a beginner or a seasoned trader, we have just the required insights for you to enhance your trades. This is Ruel Fernandez, your mentor trainer at Simple Trade with Patience, bringing you the latest analysis on Nifty, Bank Nifty, and Finnifty. Not only analysis, we will be going ahead and taking a look at crucial support and resistance, also key levels, and some trading setups. So friends, if you're ready to lift up your trading game, let's go ahead and hit that subscribe button, click on that bell icon so that you do not miss on future updates. Before we move ahead, a quick reminder that the information shared in this video is only for educational purposes. It should not be considered as financial advice. Please consult your financial advisor before going ahead and making any trading or investment decisions. Friends, remember, trading involves a lot of risk, so trade responsibly. Let's go ahead and start with Nifty. Friends, Nifty, which has currently closed at 24,708.40, which is a nice increase over its previous day's close of 24,467.25. Now, the key levels which are to watch are at R1, which is 24,946, which is a crucial resistance, and S1 at 24,383, which is an immediate support. We also do have 50 EMA at 24,385 and 100 EMA at 24,320. Both are crucial for short-term trends. Now, if the market breaks above 24,946, we could see a possible uptrend and possible pullbacks towards level of 24,383. That's down to our support levels. Now let's go ahead and take a look at market sentiment and key levels for Nifty. Now, as we know, Nifty is trading above 50 and 100 EMA, which suggests a bullish trend as long as price remains above these key levels. However, be cautious that a breach of support, which is at 24,383, might indicate a short-term correction or a short-term downtrend. So some trading setups and strategies. A break above 24,946 could trigger a possible move towards R2, which is at 25,183, or the round figure 25,200, or even R3, which is at 25,508. Now, if you are a conservative trader, you might want to go ahead and trade pullbacks to the levels of 50 EMA or 100 EMA. Or you could also make use of the demand zone, which is present at our S1 levels. Also, do look at the screen. There is a supply zone, which is at our important level of 24,857. Now, remember, guys, these levels could exert buying or selling pressure. So a break of S1, which is at 24,383, could trigger some bearish sentiments and take Nifty down to S2, which is at 24,058, or even to S3, which is at 23,821. Now, another key levels which are placed at 24,142 and 24,062. Now, these are around about near to our support 2. So these levels are very crucial. On the higher side, we have 25,010, 25,090, which are between our support resistance 1 and resistance 2. So this area would also be a very important area. As I've mentioned in earlier videos, breach of these levels could trigger possible upside movements, while you could look at bearish setups in these areas and trade all the way down to this area or below that. Remember, this is a no trade zone, so kindly do not initiate any fresh trades into this area. On the lower side, these are key levels wherein our demand zone is at the first key level, so possible pullbacks. And below S2, we could see a possible bearish trend. So let's move on to Bank Nifty, which has closed at 53,603.55, which is quite decent enough from the previous close of 53,266.90. Now we can see R1 at 54,044, which is an immediate resistance and immediate support, which is at 53,007. Now EMAs are showing strong bullishness with 50 EMA at 51,768 and 100 EMA is at 51,373. Now, as long as Bank Nifty is above these levels, we could be in a bullish trend. Now, a break of R1 could trigger the next possible bullish move, while breach of support 1 could trigger bearish moves. Now, let's go ahead and take a look at market sentiment in Bank Nifty and key levels. So the key level is a support of 53,007, which is also near about our demand zone. So possible pullbacks in this area and could present possible buying opportunities. So what's the trade setup and strategy? A break above 54,044 would be a signal for possible bullish move towards R2, which is at 54,485, and R3, which is at 55,082. However, remember, if the markets pull back, then S1, which is near our demand zone, S1 is at 53,007, should hold as a strong support for potential long trades. While a breach could trigger Bank Nifty down towards 52,409, which is our support 2, and S3 at 51,969. Trade setups, as mentioned earlier, these are important areas for reversal. These are important areas for reversal on the higher side. Breach of these levels could take Bank Nifty in that direction. Orange lines denote no trading areas, not to initiate fresh trades. We have a supply zone, a demand zone. So finally, let's go ahead and take a look at Finnifty. Now, Finnifty, which has closed at 24,731.25. That's also recently up over previous close of 24,562.6. Now, there is an important resistance level, which is at 24,959. On the lower side, we have support, an important support at 24,420. Now, 50 EMA is currently below the closing price, which is at 23,878.14, and 100 EMA at 23,576.59, showing potential bullish bias. Now, as long as Finnifty holds these levels, we could see possible bullish strength or sentiments in this index. So market sentiment and key levels for Finnifty. Well, as you see, support of 24,420 is near our demand zone. So a key level in terms of concern pullbacks. Failure to hold this level might bring in bearish sentiments. Now, what's the trade setup and strategy? Simple. If we break R1, that's 24,959, we could move all the way up to 25,186, which is R2, 25,498, which is R3. Now, pullbacks to support 1, that's 24,420, could offer possible buying opportunities and a continuation of the bullish trend. While a breach could take Finnifty down to S2 at 24,109 or even lower to S3 at 23,881. So friends, very important topic now, risk management and stop loss. So no matter however confident you are in any trade, it is always crucial that you protect your trades, you protect your capital. One of the simplest yet most effective tool for this is your stop loss. Remember, stop losses are not sign of weaknesses. Okay, they are not a sign of weakness. They are your safety net. Now, they allow you to stay in the game even when the market goes against you. Remember to always set your stop loss before entering a trade and never move it to chase a losing position. Close your trades. Do not forget about position sizing also. Make sure you are risking that amount which is tolerable by you for each trade. So a good thumb rule is that you do not risk more than 2% of your total capital on a single trade. Now, this way, even if a trade doesn't go in your favor, you are protecting your account from larger drawdowns. So to wrap things, what we are seeing in today's market is we are seeing a bullish outlook across all three indices, Nifty, Bank Nifty, Fin Nifty, with well-defined support and resistance levels. So if you're planning to trade these indices, keep a close watch on these key levels that we've discussed. Use proper risk management strategies to protect your capital. Before we go, make sure you do like this video. And if you found this analysis helpful, go ahead, leave a comment, share it with your friends and families, hit that subscribe button, click that bell icon. Thank you for watching, and I'll see you in the next video. Happy trading, stay patient with your trades, and take care.